Wow, we broke major support levels that go back to 2002, 2003. Yet again, the Dow off by 5.5%, NASDAQ off by over 5%, the S&P 6.7%. The Russell's down 6.5%. Huge, huge sell-off. Technicals held up a little better than everybody else, but the Russells, man, and the S&P took a nose dive. Now, this is what I want to bring special attention to. This, you can hear it in my voice already. This market has broken big, big support levels. You see this 800? We just sliced through it like a hot knife through butter. And then we broke through the big one right here, this big red line. Let me go back in time showing you where I drew these lines. Now this goes back. This thinner line right here is the support level that we have in 02. Oh, this is 03 right here, March of 03. We come over here and we have July of 02. We have these two support areas. And then we have the main low, which was October 02 right there. And I was king on this. As a matter of fact, I could bring this up just ever so slightly, to hit this area. So now let's go back. Look at this. We sliced through both of them. Where do we have support again? Now, look at this teal line that I have drawn. See this support right here on this doji? Support right here. That's precisely where we closed today. Right on the nose. Draw those trend lines. They are so important. Our descending triangle broke down right there. Today was on big volume too. Check out the volume across the board. Big volume on the sell-off. I day traded today at the end of the day aggressively. Wow. Big day for me in the markets trading short. I was in the SDS, which is a bear ETF. Technically, I was long that because it's an inverse stock, or it's not a stock, it's an ETF. It moves inverse to the markets. So the S&P was down 6.7%. That means the SDS was up over 12% today, and that's what I was in. Big day for day traders if you were in the right direction. Big day. You don't come across these days too often. But anyway, here's what I'm looking for. And let's blow this dude up and really focus in what I'm about to say. We broke this support line. We broke down. This was today. We broke these 2002 levels, 2003 and 2002, and this right here was our 2002 level in October. And that was very, very low, and boom. Now, we're sitting here at 752. Now, this is the next thing I'm looking for here. We need to close below this support line. We need to close lower than that. So if we can close below our low here, let me get my data box up here. I'm looking at this low. See this low right there? That low, we got down to 747, 748 area. If we can close below today's low, either Friday, tomorrow, or Monday, now the question is where's our next level of support? Well, it's down there a ways. Watch this. I'm going to pull up the spiders, which is just the S&P ETF. SPY. And I'm going to pull up a monthly chart. Now let's look for support areas. First, I'm going to draw myself a line here, precisely where we're at this very moment. I'll go down just a hair right there. That's where we're at. So now let's go back in time. See, we've cleared all this. We've already busted through the support of 2002, 2003. So we're down below that. So where's our next level? Right here. Our next level is right here in this area. So that's going to put us around the 660, 670 mark on the SPX. So I'm going to go back to the SPX. We're on the monthly. So the next level is right here at 666. There's irony. 666. There's our next level of support. If we can get down past 625 area, get below this area, if we can get right there, get 625, next levels are down here below 500. I'm telling you, depression time. Now here, let's scrunch this all together and take a look at this. This is a monthly, all right? The last time we were at these lows was 11 years ago on April 16th in 1997. The last time we were this low was 11 years ago. Let that sink in 1997 right here. So if I were to draw a line here, I'm going to draw a line precisely where we closed, right there. There's where we closed. And there was April right there. So April is the last time we were here, 1997. You can see that below. See, you can see it right here. Right there. So that, wow. So the people, whatever, let's say you had $100,000 right here. You go up, well, let's say you had $100,000 up here. So October of 1999, you had, let's see here, let's blow this up just a hair. That high right there, that was March of 2000. March of 2000 right there. Let's say you had $100,000 right there. Well, this pullback here was about a 60% pullback from the run from 1995 up to 2000, about a 65% pullback. So you lost about 65% of whatever you had. Now remember, if you're in a mutual fund, you lost another about 3% on top of that. Then we come back right here, and at the end of 2007, you got your $100,000 back. But did you? No, we already talked about this. It's about 7 years have gone by, inflation at 3% per year, and that's being very conservative. You're down over 20%, and that's not even including compounding. But did you really get your money back? No, because of inflation and being in a mutual fund, the lagging that you have there, and the compounding. But your bottom line still, you saw $100,000 there. Now, right here, we gave back the whole bull run, every bit of the bull run plus some that we got from 2003 up to 2007, 2008. Another 5 years here of a run, and all of it's gone. So your money that you had here is far less, and include into that all your inflation, the cost of being in mutual funds. It's just a tragedy, and I hate the fact that people are suffering in their 401ks. They're suffering by being at the hands of their broker, who none of them that I know of. I mean, if you're a broker listening to this, let me know if you called your clients and said to go to cash up here in January, February, March, April, even last month. If you called your people and said you went to cash, let me know. Send me an email, d7@freetradingvideos.com. Send me an email. I want to know that. But to date, I don't know any brokers that's done that. And we broke these support areas, we could be in for a very, very rough ride. So I'm going to be short the markets. I'm going to start taking all my employees, my dollars, if you will, off the bench and start going short, long as we can stay below the 2002, 2003 areas. As long as we can stay below these two red lines, if we can stay below those, I'm going to be short the markets. And a lot of us will be making a lot of money. People get rich in severe bear markets. So you want to be on the right side of the fence. And I feel so sorry for all those people picking bottoms. Buying in this environment is just ludicrous. It's asinine. It's craziness. Don't buy in this market. Absolutely, if anything, be in cash. Put your 401ks, into the safest money market type or bond fund or a government bond fund or something. Bury it in your backyard if you have to. Save yourself. Don't incur any more damage to your accounts. Do me the biggest favor ever. Do us the biggest favor ever. It's really you doing your friends the biggest favor ever. There's a lot of traders that out there, or people that should be more proactive in their trading, please, please, please send them an email with our web address, freetradingvideos.com. Just let people know about our site. People deserve it. People need to know the truth about the markets, and we're here to share the truth. So anyway, and first and foremost, we're here about capital preservation. That's what makes us tick. Secondly is profits, exactly in that order. So anyway, hey, there should be some great money making opportunities out there. Happy trading to you, and we'll see you at freetradingvideos.com.